Saugata Gupta, who's Managing Director and CEO of Marico, joining us to talk about their earnings. Saugata, it's great to have you on the show. Thanks very much for taking out the time. We're witnessing broad-based volume growth recovery across the FMCG space. Your peers have seen volume growth in the late teens or even 20% plus. Would you say that at 12.5% you could have done better?
So the way we look at it is, I think it's a good performance. Yes, we have to try harder. Having said that, I think we have to look at the overall year, and I think our aspiration is to get double-digit growth for the overall year. So therefore, I think there are enough tailwinds as far as we are concerned. Our new categories like male grooming, foods, and premium hair nourishment, female nourishment is doing pretty well. We continue to gain market share on 90% of the portfolio. We have some problems to still solve on Saffola. So I think the way we look at it is that, yes, I think we need to try harder as far as volume growth with relative terms is concerned with respect to Q1. But I think we are pretty optimistic that we should be able to deliver a double-digit growth and or for the full year and an 8 to 10% growth for the balance year.
Right. Saugata, so how much pricing power would you say that you currently enjoy for the Parachute brand? And, because that portfolio has seen a huge price hike leading to about 35% value growth, but only a 9% volume growth.
I think if you look at our overall philosophy, our philosophy is to ensure that we continue to drive value to the consumers such that we maximize volume growth and market share. The way we have, obviously, when there is an unprecedented input cost increase like the 70% which we had and point to point and a 50% on an annualized basis, you can't pass on everything to the consumer, because even if the brand enjoys pricing power, it is important that the consumers continue to drive value and not downtrade. So I think we had taken a certain judicious price increase so that we maintain volume growth. Fortunately for us, I think as far as input prices are concerned, it's peaked out, and in fact we are already seeing the downturn, and therefore we did have to take a margin contraction for 1 or 2 quarters. I am not really bothered about short-term margin contraction as long as the long-term story and the long-term consumer franchise is intact. We will always pick up the margins over the second half of the year when the raw material prices are the way downward.
The other parameter that has been a bit of an outlier for other FMCG companies is the international business. Most companies have seen a massive recovery with double-digit growth. Why is the growth only 3% for Marico?
So there are two things. I think again I will talk about, if we look at the constant currency growth, it's around 7 to 9%. I am pretty confident that the international business of the balance year will deliver a double-digit constant currency growth. One of our markets, which is Southeast Asia, is flattish. Middle East and North Africa, where we had been facing some headwinds in the last 2 years, has delivered now consistent double-digit constant currency growth for 2-3 quarters. So that trend will happen, and I think Vietnam is on a recovery path as we see today, and therefore there is reason to believe that we will be able to deliver double-digit constant currency growth for the balance year.
But your margins have slipped despite all the price hikes undertaken. More price hikes you think are on the anvil? You operate in a broad band of gross margin per unit. Where is it currently?
Let me just give you some ballpark numbers. I think our effort is to, as I said, that we always choose long-term, because we operate in emerging markets, volume and market share over margin, short-term margins, because we believe in emerging markets you can always get back margins. It's much more difficult to get back volume growth and market share. Having said that, we operate ideally on a floor margin of an annualized basis of 17%. So therefore we are in that 17 to 18% band. Going forward, I believe, as I said, that the copra prices have peaked out and it's only now going to come down, and therefore we can always lap up margins in terms of in the second half, which will happen. Our endeavor is to ensure that we continue to deliver 8 to 10% volume growth for the balanced quarters, such that we deliver overall definitely a double-digit growth for the entire year. And once we do that with a 6 to 7% inflation which is there in the base, we should be able to deliver 15% to 20% top line growth in the year.
Right. So what is the latest update on the movement in copra prices, and is all your higher cost copra inventory consumed, or are there other attributable reasons as well?
So the way we look at it is there, if you look at the sequential levels, there has been a decrease, and we believe that it will continue to decrease. There will be some more decreases as we go into the back half of the year. As far as inventory is concerned, for any product, you obviously have some inventory. So there is always a couple of weeks to a couple of months lag between consumption and actual prices. But I think the way to look at it is that some of these significant margin contraction that has happened over this quarter, I think will start easing off as we enter the second half of the year.
How is the Wahoo portfolio doing? It is about 34, you have about 34% of the market share. Have you managed to expand there? The penetration levels are very low. What is the distribution plan there?
So we are still, as far as rural is concerned, our contribution is 33%. It's slightly lower than our peers, and we will continue to drive price point packs in the rural areas and grow. We have had significant improvement in our rural contribution over the last 4-5 years. And as you know that we continue to, even this quarter, we gained market share in 90% of our portfolio. So that is pretty intact. We will continue to gain market share. And we are focusing on both volume and value share because we want to operate at both bottom of pyramid and in the premium end. So some of our premium products like aloe vera is doing pretty well. The other silver lining, I think, is that some of our premium portfolio like male grooming and serums and all have started what I call entering the point of inflection and a virtuous cycle of growth. And we are pretty confident that the premium part of the portfolio is going to deliver 20% plus value growth over the next 2-3 years.
Right. Your Saffola brand saw marginal recovery in edible oils, but the real growth came in foods. How will the brand shape up going forward? What margin do you enjoy in the foods business, and what is the sustainable ban for the future?
So as far as foods is concerned, while it's 23%, I think the potential is far more bigger. So I think we are still between 100 and 150 crores. We have to deliver. The first point of destination is a 200 crore number, and we believe that is a nice, good break-even number, which gives us the confidence to go to the next level, which is a 500 crore over a 3 to 4 year period. As far as Saffola is concerned, I think we faced headwinds last year. Have we solved the entire issue? The answer is no. We have solved some part of the issue. Now, this 10% volume growth in Saffola edible oil came on a low base. So I think we have solved half of the issue, and as we move forward in the next 3 to 5 months, we have to solve fully so that we get back into that 10% growth over a sustained period on quarter.
Okay. You've made a lot of interesting acquisitions as well in the past, whether it's RevoFit or Beardo. Sticking to your strategy of exploring growth, which is very niche now, what else is on your radar?
So we'll continue to focus on driving digital brands. We believe that is the way forward in line with new trends as far as consumers are concerned. As you may know, recently launched this exclusive called Set Wet Studio, which is another male grooming. So we are continuously looking at in the nutraceuticals, male grooming and some of the premium spaces, whether organically or inorganically, growing through digital brands, because we are also gung-ho of e-commerce. It already contributes 2% plus to our turnover. And I believe that over the next 3-5 years, one of the big drivers of growth will be e-commerce and digital brands.
Well, that was Marico management talking about numbers going forward and how one should read into current quarter numbers. Thank you so much, sir, for joining us and throwing light on your numbers and enlightening our viewers compared to what has happened quarter on quarter and how are things looking going forward.